Morning, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is September 2nd, 2022. We just saw the non-farm payroll report, a little bit of something for everybody. Let's take a look. Non-farm payroll came in at 315,000. That was a little bit higher than the 300,000 expected, but there was a revision to the prior month of minus 108, prior 2 months, I guess, of 100 minus 108. So took a little bit of the sheen off of the 315,000 level. Also taking off of the sheen was the tick up in the unemployment rate to 3.7% from 3.5%. That was as a result of the participation rate increasing to 62.4% from 62.1%. So more people entering into the workforce. Ticked the unemployment rate to the upside. Average hourly earnings came in a little bit less than expected at 0.3% versus 0.4% and 5.2% versus 5.3% year on year. What we saw in the markets was the stocks started to move a little bit higher. Looking at the major indices, currently we're seeing the Dow Industrial Average up 166 points, the S&P index is up 23 points, and the NASDAQ futures are implying a 69-point gain. That's off their higher levels. We saw the NASDAQ index up about 100 points, maybe a little bit higher than that, after the number now down to about up 69 points. So coming off a little bit, but still higher on the day. NASDAQ's been down 5 straight days. We saw interest rates move a little bit lower. The 2-year yield is down minus 4.2 basis points. That's a couple basis points lower than the expectations, and the 10-year is up 1.8 basis points to 3.27%. Taking a look at the euro versus US dollar, we saw the price move above and below the 100 and 200 hour moving averages. That's in the middle of this trading range that has the 38.2% retracement, basically as the high price. I would think that if the price gets above the 38.2% retracement and then above this old swing area here, the low of the swing area, I should say, between the par 98 to the par 21 level, that would be more bullish on the top side for the euro versus US dollar. But first steps are to get above this swing area, 38.2, and then we'll look at this yellow area through here to see if the price can get above those levels. On the downside, the 100 and 200 hour moving average is acting as the neutral level, where I don't know what's going to happen. Waiting for the next shove. If we move below that level, the 99.515 level, that's the old low going back to July right here. That's this low right here. And that was on the daily chart. Get below that level, and then we have this nice little floor over here between the 98.99 level and the 99.13 level. You can see the number of different lows through here where the market stalled against that level, including yesterday where the price came down in between this upper ahead of the extreme level here, where even it gets a little even more minutia support against the prior low. So euro versus US dollar story remains the same for that currency pair. Taking a look at the dollar versus yen, what we did see was a move to a new high. That high took the price up to 140.79 for the dollar versus yen. We did have a rotation back to the downside that held against this support level. On the top side, we have this topside trend line that comes in just above the current high price at 140.87.6 or 88, and moving higher as we go through time. So getting above that level would increase the momentum to the upside and the that we're seeing through this channel here, and give traders more upside momentum. How about that? This level is that we saw the high here is the highest level since 1998. Another 1998 high for the dollar versus yen. So you just try to pick spots, and the next spot to get to and through for the buyers would be above the 140.87.6 level. Get above that level, increases a bullish bias for this pair. It would take a move below this trend line, below the 38.2% retracement, below the 50% retracement, this high, the 100-hour moving average, in order to push the price more to the downside for the dollar versus yen. The sterling versus US dollar, this pair did get above this downward sloping trend line, and for the first time, and I guess this week, the low price is higher than the previous day's low. So that's good news. This is the low on Tuesday, low on Wednesday, low on Thursday, all to the downside. But today we saw a sort of a break above the trend line, sort of a sideways break, if you will. Not like we saw a lot of momentum to the upside, but we nevertheless did break. So traders would be watching the underside of the broken trend line as close support. If it holds above that level, maybe we get a rotation back to the upside. If it breaks below that level, we're going for a new March low going back to March 2020, the pandemic. For your guide, if we go to the weekly chart, the pandemic low came in at 114.033. So we've reached a low of 1.04977. Getting within 90 pips, I guess, of that, or 94 pips of that low from March 2020. We'll see what happens. But on the top side, the low price from Wednesday's trade at 1.1599. Let's call it 1.16. It would need to be broken on the top side. Then you go back to Tuesday's high, 1.16205. Then you look at the 100-hour moving average. All these levels need to be broken to increase the bullish bias, including the 38.2% retracement. So still, although we broke above the trend line, giving the buyers a little bit of a hope, we're not able to get above other levels on the top side for this currency pair. Let's take a look at the dollar versus Canada. No Canada employment numbers today. They'll be reporting them next week. But if we look at the hourly chart here for this currency pair, we did move down toward our 100-hour moving average, and that level would need to be broken on the downside in order to start a further corrective move. Also below this swing area right here, if I go back, actually I'm going to put it on the 4-hour chart now, just to show you what this level represents. We had to swing high, swing high, swing high, swing lows through here, swing high, traded above and below it earlier this week before moving to the upside. So getting through this area right through here would be an important milestone if the sellers are to take more control. Absent that, absent getting below the 100 in this swing area, and the buyers are still in control, even though the price is off the high price for the dollar versus Canada. The Aussie versus US dollar had a nice move right up to the 100-hour moving average and also the swing area through here, and found willing sellers against that level on the first test, 68.504. If the price is going to go higher, it needs to get above that level. But as you can see, we've rotated back to the downside here after the spike higher on the employment statistics. Finally, the New Zealand versus US dollar. Let's take a quick look at that. And like the Aussie versus US dollar, it moved up toward the 100-hour moving average, actually broke above it, and also moved a little bit above the 38.2% retracement of this last move to the downside. What's good for this currency pair is we did hold support once again against the lower trend line here and found the bounce, but the bounce needs to get above the 100-hour moving average and the 38.2% retracement to mean something. And then also the 200-hour moving average from a technical perspective. Recall earlier this week, the price did find resistance levels against the 200-hour moving average. So remains a key level. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.